Good afternoon, everyone, and welcome to today's webinar with Left Brain Professionals. Today we're going to talk about job costing for government contractors. We're really glad that you joined us today. My name is Liz Brigson. It's a pleasure to host you, and there's a few things I'd like to point out to help you get the most out of the webinar. So first of all, if you've joined us before, hopefully you have. This is the 11th webinar in Robert's series this year, and it's been excellent. I know that if you're just joining us for the first time, you'll be able to jump in and learn a lot just from today, but know that there's been a whole series this year, and so you can get in touch with me or Robert if you want some more information about the prior sessions. But we really like to make these webinars interactive. So if you want to say hello in the questions box, let us know where you're joining from. I can see some of you have already done that. Welcome, Crystal. It's great to have you with us, and we're happy to give you a warm welcome and, more importantly, take your questions as we go throughout the program today. I want to make sure to point out that there are handouts that you can download from the GoToWebinar control panel. You can also get those handouts from your Incourse dashboard, so it's a convenient place for you to download them or just access them later in the future for reference. Today's webinar is an hour and a half, so we will launch 7 poll questions. To earn CPE credit, you'll want to respond to at least 5, but we'd love to have your response and participation in all of them. And lastly, if you have any questions about the webinar today, you can always contact Incourse at support@incourse.com. So with that, it's my pleasure to welcome back Robert Jones. Robert Jones is the founder of Left Brain Professionals. He's a government contracts and accounting expert. He has a master's in accountancy from the College of Charleston. In his career, he's invested his career in working with defense contractors. He's been a controller. He's worked in business management, compliance, and operations roles. So he really knows the world of accounting and defense contracts really from every side, which is super helpful, and I know you'll enjoy hearing his perspective today. So as you know, Robert is also an instructor and a speaker. Robert, we're really happy to have you here today, and I'll turn things over to you.
Yes, good morning, good afternoon, depending on which time zone you're in. Thank you for joining us. Thank you, Liz, for another opportunity to be here with the Incourse attendees. As Liz said, we're here to talk about job costing today, as she said, number 11 in the 12-part series. Hopefully you'll come back in just a few weeks. We'll be talking about the incurred cost proposal. And actually, as we go through the material today, I'll be making some references to help you connect what we're doing today to what we'll be talking about in about a month. Left Brain Professionals, who we are, a small boutique accounting firm. I use that term because we work only with government contractors. We practice primarily accounting system design, implementation, and audit support. We also help some of our clients with cybersecurity compliance, a big topic for government contractors in today's world. In the accounting perspective, we do a lot of work with indirect rates, bids and proposals, cost and price analysis. That SF 1408, helping clients obtain an adequate or an approved accounting system. And one of the requirements on the SF 1408 is job costing. If you contact us or interact with us, not only will you have an opportunity to meet me, but also an opportunity to work with Melissa and Steve as well. Our learning objectives for today, at the end of today's presentation, you should be able to identify the requirements of job costing, list the advantages of job costing, define the elements of a job cost report, and list best practices for job costing. Got a polling question to get us started here, really just to gauge where you are as we open today's presentation.
It's always helpful to understand the baseline heading into the presentation. So the question is, how comfortable are you with your job costing capabilities? So perhaps on one end, maybe you're not quite sure what job costing is, the topic caught your attention, and on the other end, perhaps you're an expert. So either way, we're really glad that you joined us, and I know that many of you are probably somewhere in the middle, and that's how it looks like the poll results are coming in. So we're going to go ahead and leave this open for about 5 or 10 more seconds. We want to make sure that at least a majority of you, close to 100% of you, are able to submit your response. So we'll go ahead and close this poll down, and we'll take a quick look at the results, Robert. So it looks like right about 75%. So 3/4 of the audience is know what it is or could use some assistance. So that's great. And then we have some folks who are new and some folks who are experts. So welcome.
Yes. All right, so back to our slideshow here. Let's talk about the requirements for job costing. The first requirement comes out of the SF 1408. Again, that's the pre-award survey for prospective contractor accounting system. That's the survey that you go through. Some people call it an audit. We sometimes think it feels like an audit. It's technically a survey. But those are the basic requirements that you have to meet in order to have what is termed a adequate, or people call an approved accounting system for government contracts. The specific requirement in there comes from 2B as in boy, and it says the identification and accumulation of direct costs by contract. And here what we're talking about is having a one-to-one relationship of internal jobs or projects to that external contract, delivery order, or DO, or a task order, TO. And and I will tell you, we've been through this with a lot of clients. I really cannot stress the importance of that one-to-one relationship. The reason for that is we have to do oftentimes reporting back to the government, whether that's whether we're a prime or whether we're a sub. Oftentimes we have to provide information right back to somebody else, and they want to see that again at the contract level, or in the case if you've got like an IDIQ contract, right, an indefinite delivery and indefinite quantity contract. If you've got an IDIQ where you're getting individual delivery orders or individual task orders, we treat those individual DOs and TOs as if they were their own individual contract. And again, the importance of this is when I say the one-to-one relationship, where we have seen problems at times is a client will have a contract and they will then have, again, whether it's multiple delivery orders or even multiple modifications to a single contract. So maybe they're working from a single contract, maybe they've got multiple modifications to that, and they oftentimes will create multiple internal projects that roll up to that. And the problem with the multiple internal projects or jobs and trying to roll it up is just that, right? Being able to write a query, write a report that properly identifies all of those internal items and summarizes them into a single number that aligns again with that external contract. Your system might be able to handle that. We find that most systems are not. You know, if you're able to do some, you know, what we oftentimes call smart numbering or, you know, smart IDs, sometimes that can help, but it only takes, you know, one item being out of sequence for that smart numbering approach to fall apart. What you can typically do, and we'll talk about more of these kinds of items throughout today's presentation, is that you're typically, most of those systems will allow you to set up a top level project, and then you can have, you know, whether they call it a sub project or a task and a subtask, whatever those elements are called, you have some other ways to be able to track modifications or other things that happen at the contract level if you want to be able to track that. But it's nice to have that top level job or project, whatever your system calls it, one-to-one relationship, again, back to that external contract. The second requirement is that, you'll find this on 2I of the SF 1408, and we have to have identification of costs by contract line item or CLIN and by units. And so I've got a couple of examples here to show you, and these are just obviously made up contract numbers. I just threw some numbers and letters on here just so you could see. But you see in my sample here, you know, I've got my top level contract. I've identified my internal project number, and we'll talk about my numbering scheme a little bit later, but just the sample that I was using here. My contract, my CLINs, my contract line items are usually 4 digits, and so we see something like 001, 002 as an example. The sample that I put together here shows I've got a contract where I'm doing site survey, soil testing, and some type of grade planning. So my internal project, I want to set it up so that I can do reporting back out at that same level. Keep in mind that when I talk about reporting, part of what I'm also talking about is invoicing, right? So if we've got a government contract and I've got 3 CLINs as in the example here, when I deliver my invoice back to the government or to the prime, whatever the case may be, I need to make sure that my invoice reflects the same structure as the contract. So I've got 3 CLINs on the contract. My invoice needs to reflect those same CLINs. Well, the only way to do that then is obviously in my accounting system or my project management system. I need to have a similar, job, sub-job, project, task, whatever the terminology is. I need to have the same basic structure in here. Now, on the project side internally, right, I might break that site survey down, for example. That might be 6 or 8 or 10 individual tasks or steps or things that I have to do. And I can, again, place other tasks underneath of there. But at least now I've got a structure, right, where I can begin to roll up this data and see it at the appropriate levels. Another example here, and again, I'm just so you can kind of see some of the ways that we see contracts come out of the government and come out of primes. The previous was kind of more of a phase approach, right? So this one, sometimes if you're selling a product to the government, maybe you're selling multiple part numbers in my example here. So I've got 3 different part numbers. The government will put those on 3 different CLINs. And in this case, I also have some installation and testing that I will do, right? Not uncommon. I sell a product. Part of the contract is that I now have to travel to your facility, install it, test it, maybe do training with you, right? Make sure that it works. So I have these different line items here that line up to that. Again, the government wants to see pricing by part, by phase of the project. Another example, and we see this sometimes where the government is buying services. They may lump all of the labor, for example, into one CLIN. They may put all the travel into one CLIN, all of the subcontractors into one CLIN. Now, let me go back as an example here, just to so don't get confused here. I'm going back to my first year where I had the site survey and the soil testing. And this is where it does get a little, I don't want to say problematic, but sometimes we have to step back and put our thinking cap on when we're setting up projects. We got to stop and say, okay, what is the requirement of the contract? How am I performing the work? What are the cost elements that are involved? And how do I line that information up? If you look at my first example here with site survey, soil testing, and grade planning, well, you can see that it's probably likely I've got labor in all of those. I may have travel in some or all of those. I may have materials as an example in all of them. The grade planning as an example, maybe I subcontract that out. So I've got subcontracting in that portion, but maybe I do all the work on the first 2 CLINs. And when I jump ahead back here to my other example, you see this contract is structured differently. They've put all of the labor in one CLIN. They've put all of the subcontractors in a separate CLIN. And there's no right or wrong answer to this. You just need to make sure, obviously, that, again, your structure of the internal project is set up to map to the external so that your invoicing is correct, your reports back to your prime or to the government are correct. All right. So other required uses of jobs. We said there are some reasons why we have to use jobs. Another reason is for the incurred cost proposal. That's the ICP. That's our topic next month. That's that added connection for you. So hopefully you've been with us maybe for all 12 or now 11, at least in this series, and you're going to come back for number 12. As Liz said, if you missed some of those throughout the year, contact her, contact us. We can help you get connected to that information. And in fact, some of those courses are available for self-study CPEs. We're working on getting all of them converted over to self-study CPEs, so we can help you with that portion as well. But the incurred cost proposal, let me pause and insert here. Throughout this whole year, the 12-part series was to take government contract accounting and kind of look at it from beginning to end. That's where we started in January. December is where we're going to end this. And I say that the incurred cost proposal is the end because that's the point where we reconcile all of our costs incurred to what we billed. And we look to see, did we overbill the government? Did we underbill the government? How did our rates perform? and we have to provide that information to the government, and it is subject to a potential audit. Well, so part of what we have to do in there is we have to provide a summary of cost by job. So effectively, right, then I've got to have job costing information. I've got to implement that in my accounting system so that I can extract that data here in particular for Schedule H. Schedule I is that ultimate reconciliation of the incurred cost proposal, where I do that, what I call the ultimate reconciliation of costs incurred to amounts invoiced, right? That's where I figure out, did I underbill, did I overbill the government, where do I stand, and what am I going to do? In order to figure that out, I've got to provide that information to the government contract by contract, right? So that means job by job information internally for me. And lastly, on the ICP Schedule K, I do need to provide hours and dollars by labor category for all of my T&M or time and material contracts. Again, I need to report that at the job or contract level. So that's a situation now in my accounting system. I have to be able to capture and report, again, by labor category, the hours and dollars that were invoiced, and even down to the CLIN potentially, right? So if I've got multiple CLINs, I need to see hours and dollars by labor category, by CLIN, by contract, and be able to roll up and support those information requests. With that, Liz, our second polling question, please.
All right, that sounds good. A couple acronyms to put out here. DO and TO stand for which of the following? And we had a question that came in maybe 5-10 minutes ago from Crystal, wondering why it couldn't, what we're talking about with job costing, why it couldn't be achieved using a chart of account in classes. And is this system exclusive to construction type projects?
So, excellent question. I would say that depending on the accounting software that you're using, it certainly would be a potential. And when somebody uses the word classes, I typically think of QuickBooks because that's the terminology that they use. Could you use classes and achieve the same thing? So I think the answer is yes. Here's one of the frustrations with QuickBooks. And I think a lot of us on this webinar will agree. We love the flexibility of QuickBooks and what we can do, and it's also the same reason that many of us accountants hate QuickBooks at times, right? Sometimes it's a little too flexible. The problem with classes, and quite frankly with some of the other stuff in QuickBooks, is that there's no way to mandate, right, to require somebody to enter that information with each transaction. Now, I will say if you are using an external timekeeping and an external expense reporting tool, something such as T-Sheets or Spring Ahead or Expensify, Concur, some of the other tools that are out there that connect to QuickBooks, in those tools, you can enforce somebody using a class. If you don't enforce it, the problem then is you end up with transactions in your accounting system, some that have class, some that don't. And then, when you start running reports, if you're running that by class and something does not have a class attached to it, you're probably familiar in QuickBooks, you end up with this extra column in your report that that's the nothing column, basically is what I call it, right? There's numbers in there, but there's no title to the top of it because it doesn't know what they are and what to do with those. That's my one frustration. Again, I would say generally you could do it, but if you're using QuickBooks, take advantage of, so you have a couple of options in QuickBooks. You can use sub-customers is one of the functionality. They do actually have projects available in QuickBooks. I wish it was a little more robust, but it does work. And if you're in some other software, we'd have to look at what those options are that are available to you.
Awesome. Thanks so much for taking the time to answer that question. Definitely a good one. Well, I went ahead and closed the poll, and it looks like 40% of our audience got the question correct, but this is kind of a tricky one because DO and TO could stand for a lot of things that sound like they could be the right answer. So correct answer is delivery order and task order.
That is correct. B, bravo. All right, back to our content here. So we said we had some required uses of jobs. We have for you some recommended uses of jobs on top of that. And again, this item here, 2A, comes from the SF 1408. One of the basic requirements for government contracting is a clear and proper segregation of direct costs from indirect costs. And you say, well, how do jobs come into play with that? Can I do that within my general ledger? Well, in fact, you can. And by overlaying jobs on top of it, and you'll kind of see in some other examples that we have coming up, you have other ways to run reports and validate that the data is correct. So you may recall, if you don't, go back to the foundations. That was the number one in January this year. We gave you the chart of accounts, kind of the preferred chart of accounts for government contractors. Part of the way we segregate direct and indirect costs is that our direct costs are in that 5 series. Our indirect costs are in the 6, 7, and 8 series, right? So from the GL perspective, I can do it. But again, here talking today about jobs, I can take that to the next level, and I can make sure that I have jobs set up for all of my direct work, right? Which makes sense. That's the primary thing that we're here talking about today. But I can also create indirect jobs. So I can have jobs for my fringe, for my overhead, for my G&A. One of the reasons that we like to do this, consistency in data entry, simple, streamlined, straightforward process for all of your end users. What we see happen sometimes is companies will set up projects and they'll use them for the direct work, and they get that and they like it, and then they kind of take all of the indirect stuff and kind of do it another way. And when you're writing processes, when you're writing policies and procedures, I like to take the approach of eliminating as many decision points as possible. And I don't mean this as a negative about our employees' ability to deal with or make those decisions, but the problem is, and I say somewhat jokingly, somewhat seriously, if you give somebody an opportunity to make a decision, right, there's 50% chance they're going to get it wrong, right? And that's a problem. And so if your process says, if it's a direct cost, do it this way, if it's an indirect cost, do it that way, well, immediately starting out in my process, I'm already giving somebody a decision, right? And there's a 50% chance that they might take a direct cost and treat it as an indirect cost, or vice versa. And then because we say, well, if it's a direct cost, we want you to go over here and do this process and do it this way. And if it's an indirect cost, we want you to go over here and do a different process and do it a different way, right? It's confusing to the end user on top of the decision they already had to make. So if you set up and say everything gets a job, then when I enter my time, when I enter my expense reports, if I'm a clerk or somebody in the accounting department, if I'm an accountant and I'm doing journal entries, I know the first part, after having selected the appropriate GL code, and sometimes even we don't need that depending on our system and how we set up our jobs, it'll do it automatically. I just need to know what job it is, right? And then I can move from there, and we apply jobs across the board in everything that we do. The other thing, and I said that it can help you with reporting, it allows you to run exception reports. And so I've got an example of that on the screen here. This is my matrix that I like to set up. I actually expand this out. We have a couple of different versions of it. This is the simple, straightforward matrix that I like to help people set up when we talk about structuring your accounting system with your chart of accounts and your jobs and how they work. So you see down the left-hand column, the account column, that's that one series through 9 series. 1 is assets, 2 liability, 3 is capital or equity, 4 is my revenue, 5 is cost of goods sold, 6 is fringe, 7 is overhead. G&A is 8, and my unallowable and other types of accounts are in the 9 series. Then you see my projects going across the top. And so I know, and the other thing that's helpful for this, you have a couple of things here. Some of your accounting systems will actually let you lock down this combination. So for example, you can go in and say, on direct jobs, somebody can only enter transactions with a 4 series or a 5 series of account, right? So on the direct, and a 9 series, I could have an unallowable direct cost. My 4 again is revenue, my 5 is direct or cost of goods sold, right? On a basic job, that's what I want. I want to see what my gross margin is on the job. I should not be charging directly into those jobs any fringe overhead or G&A. We apply those costs separately, right? We calculate what our fringe overhead and G&A rates are, and we allocate those costs or apply them separately, but I never directly charge, like, when I get my health insurance bill, I would never directly charge a portion of that to my direct jobs, okay? So if your system allows you to lock down those types of transactions, building out this matrix helps you program, right? Somebody's got to go in and you have to say, usually line by line on the general ledger, what types of things you can do. This makes it easy. Even if you don't, so I go back to my example for QuickBooks where somebody was asking a question a little bit ago about QuickBooks. This is what we do. We use QuickBooks internally ourselves. We use QuickBooks Online for our firm. We use QuickBooks Online and Desktop for a number of our clients. And the nice thing is we can easily build reports and we say, okay, show me direct jobs. And when I run my stuff for my direct jobs, I should not see any transactions again in 1, 2, 3 or 6, 7, 8. And if I do, then that right there is a clear indicator, right, that something has been posted incorrectly. And you can take that methodology and apply it across the board. I'll pick on G&A as an example. Whether you post balance sheet stuff through the G&A job is kind of a separate conversation. I listed it here as an optional item for you. But I definitely should not have any 4, 5, 6, or 7 series accounts on my G&A job. And again, it's easy to run reports, to build reports. You can build exception reports. There's some different ways to do it. But regardless, it's easy to build and run some kind of report and glance at it quickly and go, oh, wait a minute, why is there a 5 series account that's now on my G&A project? It's a clear, so it tells me that, right, one, at the very least, it tells me something was wrong. So either something was coded to a 5 series account that should not have been a 5 series account, and that's a possibility, right? Or something was correctly coded to a 5 series account, but now it was clearly somebody selected the wrong job, right? They selected a G&A job when it really should have been a direct job. So if we do that and we run those reports at the end of the month, we can reconcile, and we'll talk about some of these reconciliations. I can then reconcile and fix that right before I move forward with invoicing or otherwise closing out the end of the month. The other recommended use for jobs, again, comes from the SF 1408. And this is item 2J on there. And it's for the segregation of pre-production costs from production costs. That situation where I may have setup to do, like in a manufacturing environment, I may be reconfiguring an assembly line or some other, again, some type of work that is necessary for me to do the work of the contract, but is not the actual work of the contract itself. And we got to be careful of that because, right, if it's not the actual work of the contract, I cannot include it in the contract, right? And oftentimes that work occurs either because it's outside the scope, outside the period of performance. So we have to have ways to do that. And one way to potentially do that is, again, through the use of jobs. Allows me to easily segregate by creating other projects for that type of work. Liz, another polling question for us, please.
All right, that sounds good. So we're going to go ahead and launch our third poll. Third poll is proper segregation of direct costs from indirect costs. Which of the following does it accomplish? We'll leave this open for a moment. I love the chart that you shared, Robert, with the chart of accounts and the numbers going down the left-hand side, and then the uses and applications going across. I think having consistency in the chart of accounts and with job costing is just, it's beautiful. And it's something that those of us who have it might take it for granted, but those of us who have maybe taken new roles in new companies, or I'm sure as a consultant, you've seen all sorts of different types of charts of accounts. It's helpful just to have a baseline of like, here's what it should look like, or here's what it can look like, and just stick to it. Have everyone paste it on their desks and hang it from their computer screen.
I was going to say, it's the accounting nerd in me that really enjoys that. And it really is fun, actually. It's one of those conversations that when we're doing a gap analysis, particularly something around the system, and and people are kind of trying to figure out, what are your pain points and what do you want to fix, and we start showing people, well, look, if you restructure your chart of accounts and you restructure the way you're doing jobs, your data entry is easier, the reporting is easy because it's easy. Again, you can build out
Yeah.
these matrices and you can go, oh my God, right, that's the information that I wanted. And again, I go back to the direct as an example, right? One of the things that companies, whether they have a requirement for, and I guess I should pause here and insert, right? The stuff that we're talking about today, while there are some very certain requirements for government contractors, the nature of what we're talking about is stuff that could apply to any company, right? You could take this to any commercial entity and say, put this in here and you'll better understand, right, what's happening. And that's why the government is asking you to do this, right? They want to know the information by that job, and they want it to be clear and accurate. They want to know what the profit, well, we talk about the profit margins, but they want to know the cost, right, by job. And as a good business owner, a good business manager, you should want the same thing. Or, if you're a CPA firm, right, your clients want the same thing out there. And this is an easy way to help them do it, right? You make sure there's always a 4 series account and it's always here. It's not charged somewhere else. And that's where we find, again, people, we get to kind of reuse this scenario, but it just happens so much that somebody calls and says, our profitability is off. We don't really know why. We can't figure out what's happening. This is an area where we find it. The indirect rates themselves is a big area, but this is where we will find, hey, wait a minute, you've got direct costs that got charged into an indirect job somewhere, and they never got billed to a client, right? And so all of a sudden, it's easy to see now. There's part of your lost profitability. You incurred costs that were never billed back to somebody. And this is a way to help you avoid those situations.
Absolutely, absolutely. Well, I have the poll results up on the screen. It looks like A and B is the most popular answer, creates jobs for both indirect and direct work, and also creates consistency as we're talking about in data entry. And it's also easier for the end users.
That is correct. I guess C would not be an inappropriate answer because, again, it could save time in the long run with any errors and variances. All right, let's talk about some more advantages of job costing. Liz and I have already kind of chatted about some of them, but we've got some other details here. It's the simplest approach to this. You're capturing costs by job or task, by contract or CLIN. Again, remember CLIN is contract line item number. You could do it by project and phase, item or module. This concept can be applied, again, to any kind of company, whether you're a manufacturer, whether you're a service provider, whether you do both, whether your contracts are a mixture of these. Again, some of this depends upon the government. I gave you examples early on where, the government may be buying, a project of services from you, and they've defined the contract by the phases of the contract. We've also seen where the government is buying, a project of services from you, but they've defined the contract by cost element. They want all the travel on one line item. They want all the labor on one line item. There's no right or wrong answer to that. You just need to be able to capture the information and set up your system that way. Now, again, part of what's nice out of this, right, if I can capture these costs by job, by contract, project, or item as appropriate, I now can begin to do analysis on these, right? And I can find, for example, hey, how am I doing on contract type, right? And when we talk about contract type, we're talking about, is it a cost type contract? Is it a T&M or time and material? Is it a fixed price contract? Because for government contractors, and we do this kind of analysis for our clients, especially those that do the incurred cost proposal that kind of comes out by default. Cost type contracts, your profit margins are typically lower than they are on T&M and fixed price, right? And so as an example, you might know that on average with your cost type contracts, you're bidding a profit or fee of maybe 9% or 10%, something like that, right? So you want to be able to run reports across not only individual jobs, but you want to be able to run reports and say, give me all of my cost type contracts, and let me see, on average, am I making the 9 or 10%, right, that I'm proposing? Similarly, on fixed price contracts, you might be in a situation where you're regularly proposing 15 or 18% fee or profit, maybe more, on some of those kinds of things. And you want to see, right, on average, are we doing it? Because again, at a high level, it gives you a sense of, okay, how are we doing by contract type? Do we maybe want to try to get away from some contract types? The other thing that you can do is further analysis and say, okay, of our overall business, how much revenue are we generating by each of these contract types? How much are our overall costs by contract type? Right? It gives you other ways to slice and dice the data and see what's happening in your business. I could also begin to break it down by project or phase, right? So maybe I have different types of projects, or maybe I've got, maybe I provide essentially the same kind of service, and that service is broken up across 3, 4, 5 phases, right? And those are pretty clearly defined phase. I do the same thing with every project, every customer kind of thing. I can begin again to develop some standards and say, okay, this phase of the contract, should cost me this. I should be able to bill this. I should be able to have, gross margin of X percentage, even on a phase, right? You might be able to break that down and say, well, at the top level, maybe I proposed 15% across the board, but I know some of these phases I should be able to make more or less within a particular phase, right? And the only way to be able to do that is to capture that information. And then again, we can take that same concept again down to a product or a service level, down to a product or a service level, and even within, for example, within a product or an item, down to individual modules. What am I doing? How am I doing in those areas? Because then as we find variances, right, now I can hone in and say, okay, why is this one, maybe I've got a product line and I've got 10 parts in there. I've got 10 different products that I sell. And when I start doing my analysis, I see that products 3 and 5, my gross margin is down. Why? Again, it just gives me that visibility. Now I can go do some digging into those particular products and try to figure out what's going on. Other advantages of job costing: easily reconcile the job cost ledger to the general ledger. This is something that I cannot stress enough. And I tie this back again to the question earlier from somebody about QuickBooks and using classes. And I said, you end up in these situations where you have that blank column. Those of you who use QuickBooks, you probably know what I'm talking about. You put something in QuickBooks, you can tell it, you have to have a general ledger account, right? We have to put an account number in. But it doesn't force you to use, especially if you're doing, again, something within QuickBooks and not one of the external programs. If I'm doing a journal entry or doing something else within QuickBooks itself, it doesn't force me to use a class. And if I forget to add the class, QuickBooks doesn't care. It posts it, and now I start running reports. And I say, okay, I'm going to run my, my reports by class. If I do that, and I fail to do some kind of reconciliation, and your reconciliation here needs to be, are there any transactions that do not have a class, right? That's what that blank column is. I call it the blank because it's up here and it's right. I would have all of my classes listed across the top, and then I've got one that's a blank. If I've got transactions without a class, then that means I have a problem, and I have to fix those before I can roll this up. And what I say here, I define this is where the sum of the parts need to equal the whole. Give you another example here. In QuickBooks, and we'll just stick with the QuickBooks stuff, right? In QuickBooks, I can run, this concept's going to apply across the board within your software, but in QuickBooks, I can run I think they call it a P&L by customer or a P&L by project. There's a couple of different reports in there I can run. If I run all of those, right, and I say, give me P&L by project, or I run an individual PL, and I know, say, hey, I've got 4 projects that maybe I'm working this month, and I run 4 PL projects, right, for those things, I should be able to add up that information and it tie to the general ledger for those accounts, right? My P&L by project or job or customer, right, it's going to have revenue, it's going to have cost of goods sold. I should be able to add all those up, go back to my general ledger at the top level and see that they match. And if I've entered transactions that don't have that tag, whatever that tag is, whatever your system calls it, that's where the gap is going to be, and that's going to be the problem. There's something else I want to go back, and it's another great time to talk about, again, QuickBooks and using classes. This really applies to kind of any accounting system where you have these free fields that you can define. Some accounting systems have clearly defined fields with clearly defined functionality, and you can't do, I mean, you can use it, but you can't really bastardize the field and try to use it for something else. The problem with the classes in QuickBooks is that it's very easy to bastardize that field. And what I mean by that is you end up in a situation where somebody says, oh, it'd be really good to capture class or capture, right, some other piece of information when we do these types of transactions. So they start doing it. And then, you know, a couple of months later, maybe 6 months later, somebody goes, wow, it'd be really good if we had this other piece of information on this other type of transactions. Oh, you know what, we got that class, why don't we use that? And now all of a sudden you end up in a situation where you've used class multiple different ways, and QuickBooks doesn't understand that. It sees a class and it will capture that and it will track it. But then when you start running reports by class, you're going to get some really wonky reports coming out, right? Because in one situation, let's say, for example, on the balance sheet, you used class to mean one thing. Maybe in cost of goods sold, you used class to mean something else. Maybe in G&A or overhead, you used class to mean yet something else. And so you've got an inconsistent approach to how you're using class. And you say, well, I'm using it the same way in each of those areas. But again, the problem is that the relationship of the general ledger account to the class in QuickBooks, it doesn't understand. And when you start running those reports and trying to do analysis and do stuff by class, you're going to get, again, some really wonky results that are not going to help you. So that's my hesitation. We use classes, but you've got to define exactly how you're using class, and you use it as class, you use it that way across the board. And then there are some ways to do that. Back to the, again, advantages of job costing here, in addition to reconciling the job cost ledger, again, a sub ledger back up to my general ledger, and making sure that the sum of the parts equal the whole. This is required for Schedule G of the incurred cost proposal. Again, another connection back to the ICP. We already talked about the connections to Schedule I, H, and J. Schedule G in the ICP is where I say, okay, and it's this reconciliation. Schedule G says, what's the sum of all of the individual job costs that you reported on Schedule H? And it takes those totals by cost element. So your cost elements are labor, material, travel, ODCs, and subcontractors. It brings those totals over, and then it says what's on your balance, or I'm sorry, what's on your income statement, right? What's on your general ledger for those, and you put them side by side, and they better match, right? Because if they don't match, now you've got a variance, and you either got to figure out what the variance is, or you're going to have to be able to explain why there's a variance on your Schedule G. Other advantages of job costing. Talked about some of this already, but tracking profitability. Particularly budget versus actual, right? Build out, and this could be at the top level for the organization, but we also get into individual job budgets, right? So it varies a little bit depending on the industry that you're in. I saw a question in there, somebody asked something about construction. Definitely, right? In construction, you guys have put together a budget up front because somebody came to you and said, I want to build a house or build a building, build a garage, whatever it is. In order to give them a price, what did you do? You put together a budget and said, okay, here's all the things that's in here. I'll build your house for $350,000, and you had a way that you came up with that, right? So you should put that estimate or that budget in your accounting system, and then run reports against it. Hey, we said lumber was going to be this much. We said, pouring the foundation was going to be this much. Whatever that breakout is for you, be able to see, did it cost us more? Did it cost us less for each of those phases? That's one of the primary things out of there. Monitoring over and under billing. That's Schedule I on the incurred cost proposal. Job cost reports give you an opportunity to compare what your actual indirect rates are, right? We're calculating those every month as we're going along. So I can compare my actual indirect rates to what my provisional or what my budgeted rates are. And in a few moments, I've got a sample report that I'm going to put on the screen and walk you through kind of what this looks like. But I need to be able, that's the way I'm going to tell what my under and over billing is. Let me give you the example of what's happening here. So right now it is November of 2020, right? And so many of us are putting together proposals to our clients to do work well into 2021, right? So hopefully I've put together a budget. That would be a smart thing to do. Hopefully I've got a budget for 2021, and I've got budgeted rates now for my fringe, overhead, and G&A, and I use that, in conjunction with my estimated direct cost for a proposal, right? And that's how I come up with my proposed price. Well, as I enter 2021, right, my actual experience for those expenses might vary. It is going to vary, right? We never hit the target right on. Hopefully we're close and we monitor and make adjustments, but it's going to vary. I need to be able to run reports and say, hey, wait a minute, did I really miss the mark? Was there some significant change in our business? If you go back to when we were talking about some of the indirect rates on other webinars, I've said, with the indirect rates, sometimes we have to go back and adjust those billing rates, right? We discover that maybe we won a big contract we didn't expect to win. Maybe we lost a big contract. Maybe we incurred some other expense that we, maybe something, we had some, whatever it was. COVID-19 this year is a big thing for people, right? They're incurring additional labor, PPE, other kinds of expenses, right, that are causing impacts to their budgets. We might need to go back and either adjust our budget, right? That's one approach, is to make adjustments to the budget so that my budget is now back in line with where it originally was. Or I might need to adjust my provisional billing rates, right? Maybe, hey, I've made every adjustment possible to my budget, but if I continue billing at these rates, I'm still going to be way over or way under, and we don't want to be in either situation at the end of the year with the government. So we might say, hey, I'm going to need to make that adjustment. Well, the only way to know what adjustment needs to be made and on which contracts, again, that's going to be a contract by contract situation, is you're going to have that information by job and be able to do that. One of the things obviously is to compare total cost to total revenue. That's that comparison at the dollar perspective that you do again on Schedule I of the incurred cost proposal. Liz, another polling question for us, please.
All right, sounds good. This brings us to our fourth poll question. And the question is, which is an advantage of job costing? I want to mention as well that we have Jenny, a member of Robert's team, on the line. Jenny helps us monitor the questions, and we do have some questions coming in. So Jenny, maybe this would be a good time while the audience is responding to this poll to take another question or two.
Yep, that would be great. So the first question we have, are there actually many companies running QuickBooks that have government contracts? Do you see this a lot?
Yes, I can't tell you any magical percentage, but I could tell you you're probably looking at 50 to 60% of small business government contractors, maybe more, who are running QuickBooks. And you can have, and we can go back on one of the other webinars, you go back, we talk about this, you can have an adequate or an approved accounting system with QuickBooks or QuickBooks Online. It is possible.
Okay, so we have time for another question. The next one asks, what did you say you used in QBDT instead of class for job costing?
In QuickBooks, you can use, you have a couple of things, and you can actually nest the functionality, and this is true in both QuickBooks Desktop and QuickBooks Online. So you have a customer, you can create sub-customers, and then you can create projects. So one of the easy things to do is, obviously you've got a customer, and I'm just going to make up something, right? So maybe my customer is the US Navy. And with the US Navy, maybe I've got two contracts. So I could create a sub-customer called Contract 1 and Contract 2, right? So now I've got two sub-customers under the US Navy. So for my internal reporting, I could see all of my work for the US Navy. I can see work by sub-customer, by contract, right? Contract 1 and Contract 2 are my sub-customers. And then I can create projects, and and those projects could actually be phases of a project. They could be an individual project. I could create multiple projects and connect to a sub-customer. So as an example, let's say my contract had 3 cleanse and I wanted to be able to break things out that way. I could create 3 projects, connect those 3 projects to the one sub-customer. There are a couple of check boxes and things you need to do in there, but you say roll billing up to the next level. So there are some ways that you can do that. You can nest multiple layers of sub-customers as an example. So there are a couple of different ways to do it. You need to know where do you want to do the billing. Make sure you check that little box that says, and I forget how it says it, but it's something, you either check it or uncheck it, and it says, roll the billing and step up to the next level. And then I can run my reports, obviously, at those other levels, right? So if I've got a sub-customer by contract, then in QuickBooks, I can go run reports by customer, and I just select that sub-customer, and then I can see what's happening on that contract.
Great, thank you.
Very good. Well, we'll go ahead and close this poll. And let's take a quick look at the results. So it looks like we're seeing all of the above. So almost overwhelming response here.
Yep. D, David, right? So for some of the advantages of job costing, what we talked about is tracking profitability, ensuring accurate invoices, and maximizing billable expenses. And let me talk about those 2. I may not have said as much as I could have on those. That goes back to that reconciliation, right, where I was saying about if you reconcile the job cost ledger to the general ledger, we make sure we don't have any kind of blank transactions hanging out there without a class or a tag or a project, whatever your system calls it. We don't end up in a situation where we've got, for example, a direct expense of 5 series, tied to an indirect job. Again, go back and look at that chart that I gave you, build out your matrix, run those exception reports and say, is there something in here that shouldn't be in here? If you do that kind of reconciliation and you do it before you're invoicing, right, then you correct those, you get all of the direct costs to the appropriate job. Now, when you run your customer invoices, you're ensuring an accurate invoice to your customer and you're maximizing your billable expenses. All right, carrying on here, let's talk about the elements of a job cost report. And this is where I'm going to have an example for you to walk through, but let's talk about it. You want to be able to see revenue or invoiced amounts by job. And I think I've said this some, but just to clarify, right, when we talk about job, your accounting software may call it a project. It's all the same thing. I need to be able to see my direct cost elements. When we talk about direct cost elements, remember that we're talking about the 5 primary ones being labor, material, travel, ODC, and subcontractor. And ODCs are those other direct costs. It's those other, things that don't really fit the other categories, little things that pop up. But I want to be able to see direct cost elements on my job cost report. In particular, I need to see like units and rates or hours and dollars, right? So for labor, as an example, when I break out my report and you'll see my sample, I've got labor, I've got the labor categories listed, then I've got the quantity of hours and the dollars that are associated with that. I'm going to have applied indirect rates. Remember with jobs, with my direct jobs, I never charge a cost, an indirect cost into a direct job. We apply those indirect rates, but I never put those costs directly on the job. I want to be able to see budget versus actual versus billing as an example, and let me clarify what I'm talking about there. Many of you will only have a budget versus an actual. You may have a separate billing rate on a contract, and you can be in a situation, we see this quite often with clients with government contracts, and it happens because contracts either start out spanning multiple fiscal years, a contract gets extended, there are delays in awarding, there are various factors that come into play where I can have different rates. So for an example, I'm just trying to give you a small, quick example. I could have 5 active contracts right now, and I could be obviously putting out proposals. And so I would have multiple rates. I could have 5 different billing rates on those contracts. And that could be because they were awarded at different times. I negotiated different rates, right? There are different factors, but I could have 5 active contracts and actually have 5 different indirect rates from a billing perspective that I'm using to bill those. In addition, I have my 6 actual indirect rate, right? So every month I'm calculating what my actual rate was this month. So now I've got at least 6 rates that I'm tracking. I've got my 5 for my active contracts. I've got my 1 actual, and I could have a budget. I should have a budgeted rate, right? So I'm near the end of 2020. Hopefully I put together a budget for 2020 so I can look and see what my actual versus my budget rates are for 2020 as a whole, but then I can compare those to individual contracts as well. And that's where I said that we have situations where I need to monitor the over and under billing by contract and potentially make adjustments to the billing rate by contract. And it's again because we end up in situations where we have different billing rates from the start on those contracts. So my actual as compared to any one of these 5 contracts, I might be over here, I might be under here, I might be pretty close, right? I could have across those 5 different contracts, 5 different scenarios that I need to deal with. I also need to have, this is again very, very important, I need to have the current period information, whatever the period of that report is. Typically we're running these by month, right? So we've got a job status report for the month. So my current would be, right now we're in November. My current would be November. I would have a year-to-date column that would be January 1st of 2020 through 11/10, or today's the 10th, I believe, through 11/10 of 2020. And then I would have an inception to date, right? And inception, this contract may have started in 2018 or 2019, right? And so I've got costs from previous years that flow through. And because I have and the reason I need to do that, right, is because I have contract ceilings, right, that I have to look at, and that's across the contract as a whole. So if I've got a multi-year contract, not only do I have to be worried about what my year-to-date numbers are, I need to know what my inception-to-date numbers are for that contract. So here's an example. Realize it's probably a little bit of an eye chart for some of you. Try to walk you through this just so you can see. Again, I call it a job status report. Some of your accounting or your software out there will call it a job status report. They may call it, again, in QuickBooks, you can run a profit and loss by job, profit and loss by customer. There's some other versions of it. They will look different. What I'm giving you here really is kind of the ideal. I'll tell you that if you're using an accounting software that was designed for government contractors, so if you're using something like Uninet, Procast, Simpac, GovCon 365, which is the new version of Dynamics Nav, some others that are out there, if you're using, again, something that was designed for government contractors, it's very likely your job status report already looks pretty much like this. If you're using QuickBooks or some other software that was not designed for government contractors, I will tell you for QuickBooks, there's a great add-on program called ICAT, I-C-A-T, just like it sounds, ICAT. Contact us, excellent, excellent program. It gives you indirect rate calculations, gives you job reports and some budgets and other stuff. Be happy to set you up on a demo and show you how that works. But again, if you're QuickBooks and you're not using ICAT, you can build some of this kind of stuff with Excel or some other tools out there. Let me go through the structure here in comparison to what I had on the previous screen, right? So one, I see my revenue, my direct cost, and my indirect cost. These are my 3 big sections. If I look at my columns on the right, remember I told you I needed current information, year to date, and inception to date. So I see that kind of information here. Now, revenue, I like to break down. This is my preferred approach to do this in the general ledger and on the job, right? And part of the reason I do this is so that I can see what is my margin for each of those elements. So if my cost of goods sold, and I may have additional sub accounts or some other stuff in there, but if my cost of goods sold or my direct area, if I've got top level accounts for labor, material, travel, ODC, and subcontractors, I want to see my revenue set up the same way. I want a revenue for labor or revenue for, material, travel, ODCs, and subcontractors. And why? Because then it lets me build a report and I can see what's my margin for each of those cost elements. You can see that here, I didn't build in the actual margin calculation, but you see I've got the data here that I could easily add that kind of information in. Under my direct cost, again, I've got my primary cost elements. Under labor, as an example, you see I've got two labor categories that I'm using on this contract. I've got the current quantity of hours, the current quantity of total dollars. It's not the individual rate, I'm representing the total dollars here. Same across the board, I've got my subtotal. I've got dollars in here for material, travel, ODC, subcontractors. Your systems probably will allow you, much like I've got details under labor, you can probably incorporate details for material, travel, et cetera, as appropriate. Now I'll go to the bottom of the screen. This is where I do my applied indirect rates. You'll see I have a budget amount and an actual amount for most companies. And your budget, again, for many companies, your budget will be the billing rate that you're using. So I've got my budgeted and my actual here. I want you to take a quick note of something. You'll see that from fringe, my actual is lower than what my budget is, which is good. My overhead is higher than my budget, which is bad. And my G&A is lower than my budget, which is good. But you'll also notice that the overall multiplier is higher for actual, right? Because my overhead, the difference there is having that compounding effect there is bigger than, even though two of my rates are lower, my overhead rate is higher and it's canceling out those other things. So what you'll see as you go across now is that my actual experience is higher. One thing I do want to note, and I didn't have time to quite correct it the way I wanted it to on the example here, obviously my budget and my actual are for the current year. Your inception to date numbers will actually be the actual numbers from prior years, right? So if I had costs on here from 18 and from 19, I would have my final rates from 18 applying to the 18 costs. I'd have my final rates from the 19 applying to 19 costs. And that's what would be represented in my inception to date numbers at the bottom. But I've got my total costs now, right? So my total costs for the project are my direct and my applied indirect. And now I can see my net income on this project, right? And I could, again, now I've got some information here that I can dig into and ask questions. Very, very helpful information. A polling question for us, please, Liz.
All right, so this brings us to our fifth polling question. And the question is, one element of a job cost report is applied to indirect rates. True or false? This will probably be a pretty quick question. Jenny, I think I see a clarifying question from Crystal out there. Do you want to cover that one quickly?
Yes. So she has asked, did he say ICAT or GovCon app for QBO?
Yes. So it's called ICAT, I-C-A-T. It's icatsystems.com. Again, if you contact us, and we'll have our contact info on the screen later, but it's support@leftbrainpro.com. Again, support@leftbrainpro.com. Send us an email. Happy to get you connected, do a demo for you and show you how it works. And that is for government contractors. And it works, let me clarify as well. Sorry, let me clarify. That works with QuickBooks Desktop. It does not work with QuickBooks Online at this time.
Good clarification, good clarification. Is the GovCon app something separate then?
I'm not sure.
That might be
somebody,
okay, so that might be a different thing. I'm just curious if there's something like ICAT that might work with QBO, but perhaps that would be a good follow-up conversation.
Yeah, I will tell you there is a program out there, but we don't promote it or recommend it. We've had negative feedback from some others on it, so I don't promote it.
Okay, I'm sure that something will be developed that will work well in time. We're going to go ahead and share the quick poll results here. So 90% of the audience responded yes. So this is a true statement. One element of a job cost report is applied to indirect rates. So thanks everyone for responding.
Yep. All right, carrying on, let's talk about some of these best practices for job costing. Some of these we've talked about, some will be new and some reminders. We talked about using jobs for direct and indirect work. Define a job nomenclature. So this is an example. This is by no means set in stone, but it does give you, and let me get them all on the screen here so we can talk about them. Again, just as an example, so if your system allows you to use letters and numbers, which many systems do, it's nice to start out with a letter. D for direct, you might take, very simple. Somebody knows, hey, I'm doing direct work. I look for the D's, and I know what, then I've got to. Usually, your system will give you the, the number and a description or title, however you've built it. But at least I know, hey, if I'm doing direct stuff, I start looking at the D's and I find the active one that I'm working on. You could, if you wanted to, and as an example here, I broke down and said, okay, I want all of my cost type contracts to have a specific code, the T&M, the FP, the at risk, I clarify. So those are situations where, and companies do this, you need to have a written internal policy procedure, how you handle this. If you're going to go at risk, meaning you're going to start work on a contract before you either have the signed contract or the signed modification, you need to separate those costs into a different project. There are reasons people do it, right? And it is at risk. And by at risk means that you're doing the work, again, without a signed contract or without a signed modification. And oftentimes companies will do this because they want to keep the project on track, and there's a general expectation that when the modification comes through, it will be backdated to cover. And it's oftentimes where we see this is really with modifications. We have seen them with some new contracts, but oftentimes we see it with a modification, right, where we're doing work. We've started to run out of money. We've asked for additional money. The government or the prime says, yeah, we're working on it. We're trying to get the paperwork to you. You're confident that you're going to get the modification. But again, when you reach the dollar threshold and or the period of performance, right, you got to start a new project and say, I'm going to continue to work at my risk, but I can't associate it with that previous project. Now, once you get a modification, there are ways to handle that, but you do want to make sure you separate them. And so we like having completely separate projects for those. We've got projects in here for fringe, overhead, G&A. Remember I said having indirect jobs, very simple. You'll notice, you might say, well, why do you have V as the beginning for overhead? We avoid using 1 and 0 or I and O in the beginning because they do look similar, right? And it can be confusing to somebody. So somebody could do data entry wrong. It could cause problems with queries and reports. So if you just use a consonant here, very clear, V projects, or it could do H or whatever you want, doesn't really matter. But my V or my overhead, my G or my G&A, your IRAD, your internal. Something to note here with your IRAD jobs, you should have a separate job for each IRAD effort. So if you start out, hey, we're going to try to tackle whatever, right? We got some new technology, we're trying to solve this problem. A couple of things. One, have the separate project. Also have a charter. Basically, write up what it is that you're trying to solve. There are some intellectual property reasons. Excuse me, legal reasons why. Excuse me. There's some legal reasons why dealing with intellectual property that you want to be able to identify what happened on that project. Another reason why you want the separate project from something else. 2 months later, you say, hey, we're going to try to solve a different problem, have a separate project. BMP, what we tell people is just have a different task for each proposal. You'll notice we've got an asterisk on the screen here for some of these. We recommend having a new project each year for those indirect jobs. Now, your direct job, you need to capture everything for that job And if that project crosses over fiscal years or spans multiple fiscal years, it doesn't matter. You're going to capture all costs for that job, for that contract in one job. Nice thing again about indirect jobs, I have one per year and then I close them out. The BMP, similar, but then what we tell people is have a separate task for each proposal that you're putting together. More best practices. Define a work breakdown structure that works for you and your cost elements for your organization. Again, this is just a sample. If you've got we've got a client that has, they make a product and they've got very specific phases that they go through in making that product. In that situation, they've defined their projects with those phases. So and now they've got a template. So that's the other thing I should have put in here is to make a template from it. But they've got a template, so they know, oh, somebody's buying this product. I've got product A template. I grab it, I use that to build my new project. It speeds up building the project, and then I also know, because I've already defined what my phases are, what my work breakdown structure is, it's automatically brought all of that now into my new project. Again, this is just an example. And depending on how projects are built and structured in your system, you might have additional codes, or maybe you can make the, you've got sub-projects. You have ways that you want to break out labor, material, travel, ODCs. You can also see where having these types of work breakdown structures are helpful when it goes back to lining up those costs with the cleanse that we talked about earlier in the presentation. Sorry, let me back up. You may also have a situation where, and we see this in Dynamics Nav, where you want to connect a sales order or a purchase order, as an example, to a project. So in the system, you want a way to connect that kind of information for additional reporting. And the way that works in some systems is you have to connect it to a task. And so it's helpful to have just a separate task that's kind of a dummy task on that project. And then what you do is you connect all of the other items in the system to that task. And again, then it's easy for people to find what they need because they can go to that task. Hey, I know I'm working on this project. I'm trying to find the customer contract or purchase orders or whatever it is. I can now go to that task as an example and then navigate to those other items. Just a sample. Again, it depends on how your system works and how you make those connections. Make sure that you allow only the appropriate expense types or cost elements per task. Again, remember, you may have that contract that says, this CLIN is only for labor. This CLIN is only for travel. So when you build your project in your system, you need to set it up so that only labor expenses are able to be charged to that CLIN. With QuickBooks and some other programs, I would say impossible, and certainly nearly impossible, extremely difficult to do. There are some programs like Dynamics Nav as an example, like Uninet and some others, where you can say, oh, this project or this CLIN should only have labor assigned to it. You can set it up so that only labor gets charged to it. Same thing for travel. And you might even have, again, one of my examples where, as I said, the sample was like a site survey. Well, in that site survey, I've probably got labor, but I may have travel to it, right? And that's okay on that particular contract, the way it's written. So in that one, I say I can have labor expenses and I can have travel expenses by cost element assigned to that CLIN. Allow only employees that are assigned to a job to charge to the job. Now, you can't do this within QuickBooks, but if you are using T-Sheets or Spring Ahead or some of the other programs out there that give you more advanced capabilities for timekeeping, you do have that functionality. Very, very helpful, very, very important, especially for contracts where you have key people, defined people, or if you've got defined labor categories. If you're doing a T&M or a cost type contract and you've got a defined labor category where the government says, we're buying these 6 labor categories from you, and here are the requirements for those 6 labor categories, then you want to make sure that only the people that meet that labor category can charge that labor category on that contract. Again, there are programs out there that will help you do that. You got to be careful, because if somebody charges the wrong project and they don't meet the requirements, now, and that gets caught during an audit and you've billed it, now you got disallowed costs, right? And so you don't want to be in that situation where you think, hey, so I incurred this cost, I'm going to bill the customer, and now you discover, oh, wait a minute, that cost wasn't billable, and now I've done something wrong. Ensure that the dates on your job align with the period of performance. I will say this is one of the downside of projects in QuickBooks. QuickBooks does not allow you to put now you can close a project, right, so nobody can use it, but it doesn't allow you to put a period of performance. A lot of your accounting software out there that has some project management built into it will allow you to put the period of performance, so that if I try to enter time or expense before or after that period of performance, right, I'm going to get an error message. It's not going to let me incur, maybe I incurred the cost, now I've got a separate problem to deal with, but it's going to prevent me from entering that information against the contract. We talked about reconciling the job cost ledger. Oops, too quickly. Again, reconciling that job cost ledger to the general ledger. I recommend this every month, assuming you're invoicing your customers every month. The best way to ensure you're getting accurate invoices and maximizing those billable expenses is to do that reconciliation every single month. And then, actually, before you do that, I should probably, well, I guess this lines up. Have the project manager review and approve the job status report before invoicing the client. Right, so run your report internally in the accounting department. Do your validation that, hey, you know, we've looked at our mismatches, we've corrected all of the mismatches, everything looks good. Now run your status reports for the month, whatever you call them. Give them to the project manager. Have the project manager review and approve them, right? They're managing that project. They should know what labor categories were used, how much money they spent on travel. Hopefully you're running these reports throughout the month. Maybe you've got live dashboards that they can click into. I know back in the day, several years ago when I got started in this industry, we used to print these every week. We print stacks of paper. It's crazy to think, right? But we would print these every week, and the project manager and their assistant would go through them and make sure so that when we got to get into the billing at the end of the month, we knew that billing was going to be accurate and ready to go to the client. Liz, a polling question, please.
All right, that sounds good. So this is number 6, and the question is, the job cost ledger should be reconciled with the general ledger how frequently? So this is the 6th poll question. We'll leave that up. And Jenny, are you seeing any questions that you'd like to address?
I do have one question that just came in a few moments ago, and it says, for fringe, overhead, and B&P, do you mean a project named with a year? In other words, fringe 2020?
Yes, that's actually what we usually do. That way, again, it's very clear for anybody entering any transactions against that job.
Excellent, very good. We'll go ahead and thank you. We'll go ahead and close the poll. Share those results. 87% of the audience say month. So that would align with the standard month-end close processes and procedures.
Yes. All right, so we've covered a lot of information. I know we've covered some questions. I'm sure we have some other questions out there. As we dive into those, let me, actually I'm gonna come back to our other polling question here in a moment. Let me go ahead and get our contact info up there. I'll bring it back up again in a second. Get your questions in the Q&A here. We've got some really good questions. Try to answer as many as we can. If we don't get to them, or if you're curious about some of the things that I've talked about today, again, drop us an email, support@leftbrainpro.com. You can go to our website. We have access to this presentation, other presentations that we have. And Jenny, who's also doing our polling, or our Q&A today, I'm sorry, is doing our Q&A today, keeps us live and active on all the various social media platforms, and our YouTube channel is where you can find some other training videos that we've put out there. So with that, let me ask our other polling question here. Liz, if you want to kick that off to give somebody an opportunity to get one last CPE credit, and then we'll do our Q&A.
That sounds great. Well, while you're typing in your questions into the questions box for Q&A, this last question is, given what you've learned today, what's your comfort level on job costing? So if you want to go ahead and let us know how you would classify your comfort level, that would be fantastic. And we'll go ahead and just segue straight into the question. So Jenny, I'll turn that over to you.
All right, our next question is, do you see most contractors that use QuickBooks, do they use the QB billing, or do you see them using an outside software to do their billing?
Great question. It's kind of a mix. One of the, I would say one of the frustrating things with government contracts is that you usually end up doing a fair amount of manual work for invoicing. And so what I mean by that, and those of you who live this world know it, if you're in the commercial world, typically, right, when you run invoices in the commercial world, you've got your own process, your own format, you run your billing, right? In the good old days, right, we used to print them out, fold them, put them in an envelope, mail them off, right? Pretty simple, straightforward, right? We've got one process, this is what we do, and we're done. The problem in government contracts is that contract to contract, agency to agency, prime to prime, the fact that maybe I could be a sub to 3 different primes. I might have direct contracts with 3 different agencies in the government. I could have 6 different formats of the invoice I have to put together. And QuickBooks and some other programs don't support that very well. Again, now some of your government contract accounting software is better designed to handle that. But oftentimes what we find is that you end up having to fill out a template. Again, some agencies or some primes have their own template they want you to fill out. Oftentimes with the government, you've got to submit stuff through wide area workflow or a different portal. Some of your primes may have yet a different portal. So you can just see that it's a crazy and confusing process. Because of that, again, some of the software out there is designed to help you with it. I do know, for example, I have not used it in T-Sheets, but they have some billing functionality. I just saw a demo the other day with Spring Ahead that works with QuickBooks, and they have some billing functionality where you can create invoices. And I know both of those, you can create an invoice that you can send to your customer, but then it pushes that invoice information into QuickBooks as well.
We have another question. Do you class in QBDT for your WBS breakdown?
Again, you could. That would certainly be one way to do it. Just make sure that, and again, when we're talking about all these classes, sit down, think about, get out a chart, do the matrix like I've done, decide when, where, how you're going to use classes, and come up with a single approach so that you don't cause yourself problems from a reporting perspective.
Okay, the next one. In a 3-tier structure, would you classify IR&D under G&A or maybe as unallowable?
So IRAD goes under G&A. We do a separate project for it, even though you have a G&A project, and your IRAD costs are going to go into that 8 series, the G&A series of accounts. We do separate projects for them, again, because of legal and IP reasons. We need to be able to track those costs and support those when we make claims later. Again, especially with the government, when we determine that something was, when we claim that something was designed or developed at private expense, having that charter, having that separate set of costs makes it easier to support those claims.
Great, thank you. You're getting lots of fantastic comments about the webinar and some people that would like to connect, so we will definitely connect you with Robert after this webinar.
Great, thank you.
Wonderful. Well, thanks, Jenny, for helping us through the Q&A, and Robert, always appreciate your willingness to take these questions as we go too. So as we're wrapping up here, do you want to go back to your contact information and just let the audience know how they can get in touch with you, and then maybe give us a sneak peek at what we can expect for the topic next month.
Yes, so again, you can go to our website, you can see upcoming events. December 1st, we'll be back here on the course again to talk about the incurred cost proposal, or the ICP. That is, again, I guess kind of the penultimate of what we're doing in government contracting, right? So all throughout this year, what we've talked about are putting together the chart of accounts, calculating our indirect rates. We've talked a little bit about budgets at times. Today we talked about job costing. And now, depending on when your year end is, what I'll tell you about the incurred cost proposal is that it's due within 6 months of the close of your fiscal year. We decided to present it in December 1, kind of again at the end of this series, but also because we know a lot of contractors have a December close, which means that your incurred cost proposal is going to be due June 30th of 2021. And as we're getting ready for the year end, as accountants, many of us are already starting to prepare for, what does that year-end closing process look like, getting ready for taxes. And what I like to tell people, and I'll remind you next month, I'll have more tips and information for you. As you're doing the year-end close, as you're helping prepare for taxes, you're going to need a lot of that same information. So it's really easy to make an extra copy, put it in a separate folder, do those reconciliations so that when we get to the April-May timeframe, hopefully we're not waiting until June, but hopefully in the April-May timeframe, we're starting to work on those. We've already gathered a lot of that information. So that's what we'll be talking about next month.
Awesome. Well, thank you so much. We're looking forward to it right around the corner. And with that, I think we've been able to address most of the questions today. Like Jenny said, definitely getting some great feedback from the audience, which we always appreciate, and a few folks who are interested in connecting offline with some specific questions. So with that, just a couple quick closing reminders. So when you take the course survey, that's going to pop up when you close the GoToWebinar control panel. We'd love your feedback. We always look at it and take it into consideration. And you will be able to log into your Incourse user account, also what we call your Incourse dashboard, to access your CPE certificate that will be available in an hour. And then the recording will be uploaded later this evening. The course materials are already there. So it's just a nice place in the cloud for all of your CPE certificates and resources to live. As Robert mentioned at the beginning, the first 3 sections of this 12-part series are available through Incourse as self-study courses. So that would be a great place to get started if you're just jumping in. Really encourage you to check out those courses. And if you use promo code LBP15, you can get a 15% off discount. So thanks again for joining us. Thank you, Robert and Jenny. We'll talk to you December 1st, and have a wonderful rest of the week and month, and we'll talk to you soon. Take care.
Thank you. Have a good day.